Let's welcome on board Anand Tandon as well and find out what he's making of the market right now. Anand, I don't know how closely you've been tracking Zee, but the management commentary, I think, is something that the street is picking up on. The fact that they've indicated a gradual margin improvement, which they foresee is going to continue, and stating that FY25 margins are going to be better than FY24. Quite the turnaround quarter, though.
Well, obviously, the management says that they are looking at better markets. The market will be taken as a positive. For the most part, the market for the second year in this quarter have not been not grown. In fact, because
we've got you on a very poor audio line. We'll just try and reconnect with you. But Zee holding up a good 4.5% as we speak right now. They've also said that they aim to deliver industry-leading 18 to 20% EBITDA margin going forward. But Kunal, for the overall market, other than banks, where is it that you're seeing some concentrated weakness?
So I think only the IT stocks and a few larger cap names is the one where in terms of sectors there is mild weakness. But then it is very minute in the larger scheme of things, because what we are looking out for is a much more bigger breakout for large cap IT names. So I think it's a phase of a pause, maybe a mean reversion, some sort of a churn within the sector, which is going on. But I would probably believe that both the sectors, as I mentioned, even the banking index as well as the IT index, over the next 1 week, I would probably believe that they should be coming out of their consolidation, because it's not as if that there is, some very heavy selling which is going on into these sectors. I think it's just a churn which is playing out, that maybe because of the market breadth which is broadened out, some money is moving out from these larger cap names and moving on back towards these mid caps and small caps and individual sectors which are moving up higher. So I think it's a temporary churn, but nothing major in terms of reversals which you're seeing in the patterns for individual sectors.
Not a complete reversal, but what is reversing in the trading session today is, of course, India Mart down 6%. There's also Fine Organics, which is reacting to its earnings, and then Birla Soft, which was a bit of a soft quarter, especially on the margin front. So that stock too has taken a bit of a knock, down about 5%. RITES is interesting because the company has actually gone ahead and announced a bonus issue in the ratio 1:1, but that's not clearly enough to better the mood of the market, because for now as well, that stock continues to be in the red. And Titagar, of course, was a weak set of numbers, so it's getting a bit punished by the street, and ditto can be said for Indus Towers as well. But I wanted to put the spotlight on some of the earnings that really came through earlier today for M&M. While the top line was largely in line with expectation, there was a bit of a miss, or there was a bit of a beat coming in as far as the EBITDA margin is concerned, and that's why M&M is in focus. Let's pull up that chart and see how the stock is reacting. In fact, we did get a chance to interact with the management at the press conference as well. Maybe you should pull up a slide as to what they're saying about the way forward, because remember the time when the stock had taken a cut because the company had taken a price cut or discounting as well. Now they've said that they wouldn't shy away from taking another price cut if needed. So that's the verdict coming in. Let's listen into a slice of conversation as to what the management had to say in the press conference earlier. Okay, we'll try and get that bite, but in the meantime, Shrikant Chauhan is also joining us. Shrikant, what's the view on auto stocks, Tata Motors, as well as M&M?
Yeah, good afternoon, everyone. I think, see, all these auto companies, they are really doing well. Most of these stocks are crossing their important levels. Most of these stocks are very close to their all-time highs. So one thing is very clear, that we are going to see further more activity in almost all the companies. Like Ashok Leyland is really doing well. Mahindra & Mahindra is very close to its previous highest level of 3020, and above that we can see breakout sort of formation, and even Hero Motors. So I am of the view that yes, if traders really looking for any sector, then I think this particular sector should be on the watch list.
Okay, that's the take coming in on M&M. In the meantime, of course, while the margins have been a beat, largely driven by better performance for their farm and the tractor segment, that is something that the street has liked. But don't go by the way the stock price has moved, because it was already positioned at a life high ahead of the numbers, or was doing very well in any case. But here's Rajesh Jejurikar and Anisha talking about all the chatter around the price cuts, and of course segmentally what's delivered for them in the quarter gone by.
So when commodity prices were higher, when there were a higher price and capacity constraints, we had taken up prices at that point in time to reflect the margins. As commodity prices came down, as the chip supply became more open, as the prices for chips came down as well, we started to see better margins, and that's the benefit we're passing on to customers. Also, with capacity going up to 10,000, we can be a lot more aggressive in the market as well. So it's a combination of all of those things.
So if we feel that we need to do it somewhere else, where we feel that there's an opportunity that we see for growth, we would do that. I don't think we plan to do that indiscreetly, and I don't think we plan to do that across a whole portfolio of products. But it's not like we will never do this again. In any segment, we will try to do the right trade-off between a sweet spot customer price, the right margin, and the ability to grow volume. So, it's our role to juggle these three variables. We continue to remain optimistic about our EV plans. As we've shared earlier, we believe the country needs a strong electrification drive. We believe we've created products which will excite the market, and we will be on track for launching our new electric vehicles in 2025.
Okay, that's the take coming in from the M&M management. In the meantime, look at Godrej Properties too. They've given out their guidance. They've said that the booking value guidance worth about 32% was already met in the first quarter, and that they are on track to meet or exceed their guidance. That's Godrej Properties holding up 1.25% as we speak right now. Kunal, out of the entire realty pack, whether you see some consolidation coming in now for the entire sector, and if not, where is it that you would pick up within the realty pack?
So I think Oberoi Realty is the fresh breakout candidate. The stock in the last few days has seen some heightened pace of momentum activity for itself. So I think the stock breaking past over the 1750-55 barrier, which was the previous swing resistance for the stock. Recently, the stock has also bounced back from its 50-day moving average. So a lot of positives for Oberoi Realty in the very short-term timescale chart, and would probably expect the stock to come back to levels of 1950, 2000 as well over the next 1 to 3 months. But more interestingly, I think what I like about the real estate sector is the momentum coming back for even the larger cap names, or the ones which were going through the last 1.5 or 2 months of consolidation. The likes of DLF, for example, that's looking attractive. Godrej Properties has managed to bounce back again from its 50-day moving average. So larger cap names also doing pretty well, and these stocks have reaffirmed their leadership quality on the short-term charts, and that would probably give more confidence in the sector. So overall bullish on the real estate stocks, and from a fresh breakout play, Oberoi Realty is something which I would be looking out for.
Okay, so that's a pick within the real estate pack, but there's just some fresh commentary coming in from both the con calls of Ambuja Cement as well as Indus Tower. So for Ambuja Cement, they are saying no such plans to consolidate all cement entities into one as of now. So they're going to keep the 3 entities separate, ACC, Ambuja as well as Penna, which they had taken over. And they are saying market share of the top 5 companies in cement industry is now at 60%, and they expect the consolidation in the cement industry to continue at least going forward. So that's the view coming in from the management of Ambuja Cement for now. Of course, the commentary from the Indus Tower con call, which is underway right now, is also there at the bottom of the screen. They are talking about how the overall cash flow generation is expected to improve from here on, and they also say that buyback is a tax efficient way to distribute cash. Currently being the operative word here, because of course from 1st October that entire buyback tax changes will also come into effect. So maybe just ahead of that, we might be staring at a lot more buybacks. In fact, Anand Tandon is back with us. Anand, what's the view on the cement industry? Do you think the bulk of the consolidation is behind and there should be now some growth, or do you think the sector would continue to be in the consolidation phase at least for the medium term now?
Whatever the companies have reported in terms of capacity growth, I don't see how they can be consolidating. The demand will continue to remain behind the supply. Most companies are adding a lot of supply even now. And while there have been talk about limestone scarcity and the need for buying up capacity of limestone, I've been hearing that for the last 20 years. So I don't think that is going to be a constraint anytime soon. Consolidation, no doubt, is progressing apace, and therefore, to some extent, pricing may be a little more controllable as each segment of the market finds 2 or 3 large players as the dominant players. But for the near term, at least, I don't see that happening, and I think you'll continue to find most of the companies operating at 70% or thereabouts capacity, which is not a very economically viable level to be operating at.
The other stock which has been in focus has been Granules. That, of course, is one of the star performers today. They've seen a margin improvement on a year-on-year basis. The EPS as well has seen quite a significant uptick. So that's something that definitely that the street is liking. You are seeing an uptick of nearly over 7% now on Granules. Anand, as individual and case-by-case story, Pharma may be, but any view that you may have on the sector or any particular company that looks interesting?
Well, there are clearly two themes playing out, both of which are doing reasonably well. One is the domestic market, where, if you've got a good distribution, there is money to be made because the volume growth has again come back to about early teens, from maybe almost single digits. And therefore, you are seeing a little bit of consolidation happening in the domestic market as well. Globally, consolidation more or less is over, and now the API prices have begun to move up. And while that I don't think is going to be a very sustained trend, because after the US elections, you are likely to see a lot of pressure coming through on US government purchases and medicines, which means that there will be some pressure in terms of trying to keep the prices under control. But for the near term, at least for the next 6 months, the likelihood is that you'll get a little better margins than you have in the past. And we are already seeing that in the current quarter estimates. So given the fact that it was a sector which had not done as much as many of the others, it is only rational that some of the companies which have got a good API portfolio, which they can supply overseas, are right now in focus.
Right. Okay, Anand, stay with us. We're going to take a very quick break. Come right back. We'll continue to track markets the last half an hour of trade.
Welcome back. Well, what's space which is on fire right now is the entire power stock. So Torrent Power is up 16%. NTPC, which had a very good run yesterday, continues to hold ground. There are a lot of these names, the likes of Tata Power, etc., which are sitting very close to the life high levels as well. What's the view on some of these names, Anand? They have run up quite a bit, all of these power companies. But do you anticipate further headroom for them to grow from here on as well?
Market seems to be super excited about the fact that there is a demand for power, as if there was ever a situation where there was not a demand for power. The problem always was and continues to remain that demand requires ability to pay. And the classic definition of demand is willingness and ability to pay. So is there a need for power? Absolutely. Will the capacity continue to grow? Yes, they will continue to grow. Is it going to be something that will make you humongous amount of money? Not really. It's a utility, for heaven's sake. Most of the companies which are in the government sector are regulated entities with a regulated kind of return, and they will be supplying to public sector units, especially the state electricity boards, who are still in deep trouble. Nothing has changed there. So, and as far as the renewable situation is concerned, you are going to be getting more and more bids, which will have to be bid at lower and lower prices by and large, especially if the price of the hardware comes down. And therefore, again, you are looking at a 15, 17-year kind of cash flow before you are beginning to make money. So you have to be careful how you buy these utilities. These are not growth stocks in the traditional sense of the word. Therefore, you have to be buying them at utility valuations. Right now, most of the public sector companies are not trading at utility valuations. They are trading as if they've just discovered gold.
Right. Okay. Anand, great to have you on the show. Thanks as always for taking the time out and joining in.
If you like this video, then like, share and subscribe to ETNow.